The Fed is expected to outline its plan today for the post-pandemic economy. Steve Leisman joins us now with a look at what to expect. I don't know. I hope you mean for what they think that they should be doing in the post-pandemic economy, because I certainly don't ascribe the entire post-pandemic economy to what the Fed does, Steve. Do I? I mean, they're definitely a factor, but it's not up to them. It's up to the economy, and they hopefully are just there to grease the wheel and do what's necessary in terms of accommodation or non-accommodation or dollar stability or full employment. But it's not
I get what you're saying.
It's not the Fed's post-pandemic. That's our problem right now, is we really do think it's the Fed's economy. It's not.
You know, it depends on where and how the market's priced, Joe. I think that when you take a market and you price it to perfection, when you take a market, you price to perfection, then every utterance of the Fed matters. But look, let's talk about what's going to happen today, because Powell's going to face the Fed chair, Jay Powell. He's going to face questions today about the policy outlook, and this is for the first time since this dramatic shift we've seen in futures markets, where they're now pricing in interest rate hikes as much as 6 months sooner than they previously had. Questions about the rate outlook come, of course. The Fed's expected to announce it's going to begin reducing the asset purchases launched to counter the pandemic. The CNBC Fed survey thinks the taper will be announced today and begun this month at a pace of $15 billion each month. With the taper baked in, attention turns to what Powell might hint about the outlook for rate hikes. Here are the Fed funds probabilities. You can see June now about a coin toss. It wasn't anywhere even in play a few weeks ago. July 63, all the way up to December, a near certainty at 92% for a rate hike. And then we start playing with the second hike. September's eased off a little bit, just a 40% probability there. November's the coin toss, a little bit more certainty about a second hike coming in December. Again, that second hike had not been priced in until very recently. Stocks so far, as you guys have pointed out, they've risen amid this changing outlook, which is interesting. Suggests maybe that 1 or 2 rate hikes next year and a slow taper, not a huge challenge for earnings or growth. The danger, of course, is whether Powell ends up suggesting or expressing greater concern about inflation that requires a tougher Fed response than is currently baked in. Robert Fry, he's the chief economist at his own firm there, writes in, the question to ask is, will inflation come back down to the Fed's 2% target without a recession? That is, the Fed having to raise rates and create one. I don't think it will, he said. I'd characterize the recent increase in inflation as ultimately temporary, but very persistent. And we're going to watch today if the Fed statement still says inflation is transitory, and if Powell maybe begins to put a timetable around when inflation needs to recede before the Fed maybe quickens the pace of removing stimulus. Joe?